It's Friday, and that means Gary Wagner's back with us. Gary, good to see you again.
My pleasure to be here as always.
Gary, let's start off with one of the biggest news items of the week, and that was the ECB, the European Central Bank, announcing its own quantitative easing program. The news seemed to have hurt gold on Thursday, but the metal has since rebounded this Friday morning following the jobs reports in the U.S. How do you see gold set up this week, Gary? I know in the past few weeks you've had some concerns with this market.
Yeah, first of all, to address the issue in the ECB and their quantitative easing and the fact that we saw gold go down, really I believe what we're seeing is a reaction to this very, very strong dollar. In other words, the actions that the European Union have just initiated have really affected the euro-dollar vis-a-vis the dollar, and the dollar continues to gain strength. As it does that, we have to view gold as a currency, and against the dollar it continues to weaken as the dollar strengthens.
Gary, you mentioned the strength of the U.S. dollar index. Would you say that's the greatest factor right now impacting gold?
Absolutely. I see the strong equities markets and the strong dollar being the greatest of factors. Of course, there are some real geopolitical hotspots right now that I fear will get worse before they get better. The difference is, in my opinion, is what we tend to see with the geopolitical hotspots is something develop a knee-jerk reaction, and then some sort, whether it's the truce that's now in Ukraine, there seems to be a quick resolvement, or the market actually looking at that issue not as being as severe as first anticipated, and so you get that knee-jerk reaction back. Whereas with the equities markets and the dollar, you've got a slow, consistent move to the upside.
So, Gary, which levels are you now eyeing for gold?
Well, 1261 is a 61% retracement. The 76% retracement doesn't come in until about 1230, but the level that I'm looking at was the recent low, I believe at around 1241. My concern is that if it does breach that level, in other words, that low at 1241, and we breach that, we could be looking at a scenario in which we are looking at gold prices moving lower, possibly throughout till the end of the year. One of my concerns is when we look at the charts and look at what happened last year, at around this time last year, we did see the market begin to top out and then slowly drift to a market low at around 1180. And that was what our rally was built upon, that really began the end of last year, beginning of 2014.
Gary, on that note, what segment have you brought us this week?
Well, obviously, on today's insert, we have to look at the possibility of what might happen if gold prices do break below these lows and where they could head, and look at models that would incorporate the bearish sentiment that's really been evident in the market over these last couple of weeks.
All right, Gary, on that note, let's pull up the segment.
Over the last couple of weeks on the chart this series, I've been talking about the fact that we were looking at a potential bottom, and that the current model that we were using was looking for a price hike in gold. Events as well as market action beginning on Tuesday, the day after Labor Day, has obviously caused us to question those models and to look at the potential for a continuation of the downside activity that we really saw begin the beginning of July. There is no doubt, the way that I see the market now with the most recent activity, I have to acknowledge I absolutely got this one wrong. My sense was that once we actually hit a potential bottom in the market, and this of course is last week when we did dip below the 61% retracement level, 1280, but then we began to trade higher throughout the week, this of course being last week. Tuesday's activity absolutely confirmed that any kind of upside model that we were looking at was either incorrect or way too early in the market, because we had this dramatic drop on Tuesday, a double bottom form on Wednesday. We had a low that equaled our low of about 1260 and a half. And then the market concluded on Thursday with a little bit of an uptick, but nonetheless still under dramatic pressure, and now threatening to break the 61% retracement of this larger move right here, this $200 rally, which is 1261. And even more so, if you recall from our last couple of shows, we identified a series of lower highs as well as a series of higher lows. In other words, a compression triangle or a tightening in range. And Tuesday's trading activity definitely broke below that trend line. Gold is a barometer, and it will react, and the price will reflect changes in other markets that it is sensitive to. Of course, we can pair it against other currencies because gold ultimately is a currency. And when we take a look at the dollar, which has just been on an utter tear, moving past the 1-year high and well above it, moving up almost a full point on Thursday, we can see that that is obviously going to have at all times an inverse effect on a gold market when we are trading it with US dollars, in other words, paired against the dollar. The second market that it is very sensitive to and has been seeing underlying pressure exhibited because of this dramatic move is the equities markets. And it's quite obvious that both the dollar's strength as well as an underlying equities markets moving to new record highs has put tremendous pressure on gold prices. So with those fundamental factors at play, there's no doubt we could see a continuation of downside pressure in gold. And my concern is that we haven't really found any kind of a bottom, and this market has literally been drifting lower since hitting this high, I believe, at about 1335. So where do we see gold going from here? My sense is this: we have broken through this compression triangle. If we do not find support at 1262, my sense is that the next level that we'll see gold move to is this particular bottom at around 1240. If 1240 cannot hold, you have a 76% retracement level at 1231, and if that doesn't hold, we could really make a play for this double bottom here at 1180. But before we get that bearish, we first want to see how is the market going to react at this current level of 1260? Can it stay above 1260, 61, which, as I've said, is that 61% retracement level? If it can, we still are looking at a low, and a higher low. Of course, that could erode at any moment. My sentiment in the market at this point is nowhere near as bullish, and I think you could tell from my tone over the last couple of weeks that I've had genuine concern in the market as it broke through various important support levels. However, when it broke through this particular support level here that we have created by drawing a support trend line from these lows, my sense was we could be in some pretty hot water. And with that in mind, I put caution into the market. We have to see how it reacts in this particular area, but a break below here would most certainly take gold prices at least to match the lows.
Fantastic, Gary. Thanks so much. We'll see you next week.
You're very, very welcome, and I want to wish all of our Chartist viewers a great weekend and prosperous investing and trading next week, excuse me. Bye-bye.
Thanks, Gary. And for all our tennis fans, enjoy the finale of the US Open. We'll see you next week.